Hey guys, what's up? Welcome to another lecture of SR Trades. Today we are gonna cover Stop Losing Money Part 2. For Part 1, I'll just pin the link somewhere over here in the screen. Now, let's just go with this. Let's just continue from where we left. Now, one part of making a mistake is not doing our own research. Thing is, people have the tendency of always choosing shortcuts. Now, even for making money in the stock market, people always tend to go for shortcuts. They just try to call up someone and ask for tips and all. But that is not exactly how it should be working. You should know the companies where you are putting in your money. That is as simple as that. You should know that, okay, if I'm buying shares of this company, if I'm gonna be a part owner of this company, then I need to know about the company. You should be having the research part done from your own end so that you know, okay, this is what's happening in the company. For example, if you're investing in any kind of FMCG company, you need to know what products they are um, selling, then what is their future plans, how are they expanding, how are they growing, how is the management thinking to take the company forward in the upcoming years and all. These are small things which you need to know before you start and go and put your money into that company's share. Uh, Second is, now this is a very common thing. You let your emotions control you. Have you noticed that part where you go through, where you have bought stocks for a company and instantly the profit and loss or the P&L tool starts showing red, and your mind tells you, did I just make a mistake? I should exit. Or your mind just panics out of that just by seeing a loss. It is now, when you are thinking that your emotions are being driven by the P&L part of your trade, you already lost the trade. The reason is very simple. You should be having a set of rules which you have to follow no matter what happens. Even if it's a loss, even if it's a win, you must be following those rules so that you can make money in the long run. Now, emotional trading, there are a lot too much of portions of that part. So I'll just start with this thing: revenge trading, fear of missing out. So I'll just explain one of them. Revenge trading is like, I took 5 trades, lost 5 trades. The sixth trade, even though any setup is not appearing in front of me, I'll still go and try to take a trade because my mind is telling me I have to win at least one to make sure that I am ending the day. That's what revenge trading is. Whereas fear of missing out is a very common thing. Once you see that, I'll just show the illustration. Let's say this is where you intended to buy the stock, and right now the stock is here. Now you think, okay, the stock might travel here, and you just enter out of FOMO, fear of missing out over here. Now think of it, if you're just entering over here, even if this is the target, what if the stock tanks like this? Have you changed your position size? No. You just randomly enter over here. If the price pulls back, you just take a loss. That is another thing. Panic selling. Now, panic selling means when prices go up higher, they don't usually follow this route. Prices never follow this route. It's price goes up higher, pulls back, goes up higher, pulls back, goes up higher, it pulls back, and it continues like this. Now, what do people do? People are very afraid of this pullback scenario and they just exit. That is what I try to say about the idea of panic selling. Like, you don't just panic sell out of a correction. Yeah, if it's a selling, that is different. You'll understand the difference. In cases of pullbacks, you're gonna see price goes up and does this. In case of selling, you're gonna see price does this and instantly this happens. This is selling, this is pullback. Just understand the difference. Overconfidence, this is very self-explanatory. Impulsive decisions, as I just mentioned, you can see the PNL over here, right? Change the color. This PNL over here. Can you understand what is wrong over here? I'll just give you 5 seconds. Yeah, I think 5 seconds are done. So, if you notice over here, the win size, whenever he's winning, he has a max winning of plus 12,000 and a max loss of this. Now, if I show you the PNL part and all, how do professional traders do this particular thing? This is basically the opposite. You will see when you notice the PNL of a professional trader and all, you're gonna see, let's say it's gotta be minus, they will have a fixed risk amount, let's say 10,000 rupees. Whenever they lose 10k. Whenever they win more than 10k. I mean 15k, 20k, 30k, 40k, something like that. That is what makes a big difference in trading. When you win big. When you lose small. In this scenario, this picture has shown the complete opposite of that. Next is, I'm pretty sure everyone has been a part of this get rich quick scheme at least once in their life, for sure. Now, this is what I want you all to be aware of. Now, big PNL screenshots doesn't mean he or she is a good trader. A good trader or investor comes from the part where he can manage the money, followed by what kind of returns he is generating on a total portfolio level. Hmm. Just for example, let's clear this part out. Just for example, think of someone having a capital of, okay, zoom it in. A person having a capital of 1 crore, he just invests 10 lakh in one stock, okay? And that stock generated him a return of, let's say 2 lakh rupee. This is the profit, this is the investment, this is the capital. On the other hand, a person who probably has a capital of, let's say 10 lakh rupee, he invested around 1 lakh. Similar things I'm using, 1 lakh. Now he gets a profit of around maybe 40,000. Now think of it in terms of percentages, not in terms of, okay, this is the profit amount. Because this is something which might vary from person to person. This doesn't make someone a bad or a good trader. If you see, this is like 10% of his entire capital. This is also 10% of his entire capital. Now, the profit over here, this is 40% of the investment amount, 40,000 of 1 lakh. And over here, this is just 20% of his investment amount. So, on pen on papers, definitely from a percentage point of view, this person is a winner. But if because people are too attracted towards flashy things and all, this 2 lakh profit is going to attract more people. But in reality, you have to see this part. How much percentage is he or she making? Fake lifestyle, I think you guys are pretty familiar with that part. Guaranteed returns. Now, understand this part. Stock market is not fixed deposit. It is not that safe thing. Yes, we have risk, we have reward. It's a very simple rule. Higher the risk, higher the reward. That is what makes this thing very volatile. And people make money, sometimes lose money as well. Now, the thing is, you cannot just go with the idea of, okay, I'll have a guaranteed return, guaranteed 10, 12% return from the stock market every year. Some year, so this is how the graph follows. And this is not just about the graph. I can just show you Nifty over here. I think it's loading. Yeah. This is the monthly time frame of Nifty. Now, some year Nifty has, so think of a person who has probably invested somewhere over here. After 2 months, he would be saying, I'm seeing a negative return of 38%, almost 37%. On the other hand, think of someone who has invested somewhere over here and same exact thing. 2 months, up 30%, something around this, up 30%. So that's the difference. The market always moves in a manner of this. There might be one big correction, but eventually the markets will move like this. And this has been the story since the start. This is what the price was in 2000, somewhere over 900 to 1000, 900 to 1500, something around that. This is around 1750, 1800, I guess. Somewhere around 1800, the market topped around 1000. Now think of it today. That doesn't mean that all stocks do this thing. There are stocks which have also, just came down. I'll just show you a example. Look at this. This doesn't give you a guarantee that with time the price is gonna go up higher. Just look at the downfall. The market or this particular stock, Newgen, it had a top of 1800 rupees. Right now, it's currently trading at 518 rupees. That's almost a 72% decline from the highs. There are more stocks, I believe. Can you just see the name? Quick Heal. So, as you can see over here, price topped around over here and then eventually it just fell down. So it is not something which is going to give you guaranteed returns that okay, with time price is going to move up higher. But overall, Nifty 50, even if you just invest in the index fund of our country, which is Nifty 50, I'm not going to take names of those funds. You can just select any index fund out there, which is basically portraying Nifty 50, and I think the average return is around 12 to 14% per annum. That is how it has made people wealth over a period of time. No shortcuts to wealth. Focus on skills, not schemes, is very important. This, I don't know how many of you are aware of this part. Too many indicators on the chart. This is the my chart, and I will be very honest. I do use indicators, but I use only these lines and volume over here. Even though I don't really look at volume a lot, but I do look at these lines a lot. Now you're gonna see people. I'm just gonna show it over here randomly. Let's go to a stock. There's a very random stock. You will see people using 10, 20, 30, 40 indicator. Let's say this, this, then you have this, we already have this volume, we have, I don't know, maybe, yeah, something like this. And you're going to see a lot of people having tons of indicators on their screen. And this is the very less I feel. There will be tons of indicators on their screen. They won't be able to clearly see the price of the stock. That's it. That is something. Yeah, if you know what you are doing, that's very good. I personally don't think you need a ton of indicators. Select one or two and stick to those indicators which are going to make you money in the long run. Try to stick with the quality. Don't just go with the quantity of indicators. Okay. Trading random patterns. Now, if I just Google over here, chart patterns for trading. Okay, these are the patterns which I have seen people using in multiple places and getting stuck. For example, let's just take the idea of flag or maybe something wedge. Okay, let's just take the idea of double top over here. When you go to the screen, let's just take a very, very random stock. Now, let's just go over here. Where do people make mistake? This is what I'm trying to show you over here. They will randomly try to spot this as double top and they'll just try to short it somewhere over here or here. Then I'm just showing you a different bias altogether. People will be seeing this is not that clean, but again, some kind of a double top where people might look for shorting over here, or even the flag, pennant, pull, this, that, and all. What are the different patterns? I hardly remember the patterns because I personally don't trade them. Rounding top, rounding bottom. Now, when I'm seeing these patterns, no, right now, what is coming to my mind is I now know where to use these patterns. That's why my eyes can see the patterns, but That's not the motive over here. Now, over here, think of someone who will be trying to see this as a triple top like this on a lower time frame. Not too sure how this might look on a lower time frame. Think something like this. Think of someone who is looking at this from a triple top and he or she is trying to short the market on the break of this neckline. Now, people try to use these patterns on random places and they lose money in the long run. I don't want you to be that kind of a trader who loses money in this kind of a thing. Lastly, holding on to losers rather than winners. This is very common. Now, I have seen people, whenever they get winning trades, they're always in kind of a feeling like, shall I just cut the trade? It's moving up higher. What if I lose the gain? What if the price just plummets? What if, let's say they have invested 1 lakh rupee in a stock, the stock is currently giving them a profit of 30,000, 40,000, and people are always trying to catch the top. What I'm trying to say is, let's just visualize over here. People have bought here. Now they're holding, and now they're scared. They try to cut the trade very early. Let's say the trade has the potential of doing something like this. But they cut the trade over here by fear that, okay, what if I lose this gain? But they're not afraid of, okay, what if they lose this particular thing? On the other hand, let's say people have bought here, the price just does this. Now, instead of using a stop loss, people just hold on to the stock because they feel, अच्छा यार कल तो stock चला ही जाएगा ऊपर. That is a very wrong idea, and sometimes we're going to see price keeps on doing this, and your losers or the losing trades become your big losers, and the winners become your small ones. That is not how the things are gonna like. If you're buying these things, these are not going to make you money in the long run. You need big winners and small losers. For example, I'm taking 10 trades. Whenever I'm winning, I'm making 10,000 rupees. Whenever I'm losing 3,000 rupees, let's say. 10 trades, that means if I win 3 trades out of it, okay, that means I'll make 30,000. And losing 7 trades over here means I'm losing 21,000. I'm still net profitable on this particular thing because my win size was higher and the losing size was very small. Even though I lost 70% of the trades, I won only 30% of the trades. So try to hold on to the winners and try to cut your losers short. I hope this is gonna help you to understand what are the common mistakes in the market. Thank you for watching today's video. Hope to connect in the next video again. Next video, I think that will be probably some kind of a strategy which I'm thinking of. So, see you there. Thank you.